you. When did you personally start thinking this move was actually real and not just one of those silver head fakes that we'd experienced last year?
Well, Romeo, I think that you are touching a very important point. Silver is actually most volatile than other metals probably in the space. And I believe that particularly it's been a real movement when you start thinking on the fundamentals that are backing this up. So the previous two times that silver went up, I believe that there were different squeezes due to kind of manipulation, if you want to put it in that words. But at this moment, we are starting to see silver to become mostly an industrial element. And, we are starting to see policies like in China, where they are starting to close the market and not allowing to export this element out of their countries. We are starting to see a world that is going from globalization to localization, and the deficit of silver, it's evident. Over 60% of the use of silver, it's industrial. So that's pretty much backing that up. And when that happens, the other 20% that it's investment starts to look everywhere, trying to get a silver to invest, a physical silver to invest. And when there is no silver for the industry or for investments, that's when we get these spikes on prices. So I believe that it was pretty much real, and that we will see more of this coming in the future because the fundamentals are still there. And I believe that they are getting better and better every day for the silver industry.
Sure, and that's an interesting point about the Chinese bifurcation of the market. You're seeing that in a bunch of metals, and I certainly don't think that's going to stop over the next couple of years, my guess. But Kit, I'll throw it to you. When did you start thinking that this current move in silver, or at least the move from the 30s to the 60s, 70s, was real, was actually kind of a consistent new floor?
Well, I think for me, once there was a solid close above the 1980s peak, which was $48, $49 and change, and once it settled into the 50s solidly, you saw quite a move there. A lot of people were waiting for that for maybe a decade or two. And when it finally happened, it took off. So that, for me, that showed that the market had finally broken through the historic ceiling that it had for many years. After that, I think the biggest problem is you started to have the momentum trading crowd as opposed to the silver investor crowd. And that really happened up into the $80, $90 range. And, that run up to 120 was way, way too fast. I think a lot of people understood that, but it still shocked, I think, all of us. The one-day drop was really significant. And so that sort of damaged the market for some time. But I think as things settle out, I'm afraid to say the war in Iran has really turned the market sort of upside down, and it's really hard I don't think anybody can predict what's going to happen in the near future until you know when the war in Iran is going to change, because there's a flood of money into dollars, and that makes it tougher to buy gold and silver. So anyway, that was for me the change. I do remember back in the bunker hunt days, and it's good to have that behind us.
Yeah, appreciate it. David, I'll throw it to you. You are on mute, but I'll throw it to you. And then I do want to talk about the war, because it just came up in the chat as well. But David, I'll throw it to you for when you realized this move was potentially actually one that's a keeper.
Really same as Kit. I think it was important to break that $50 mark, which was hit more or less twice before, in 2011 and 1980. And once it did that and closed, solidly above that, then I knew we were off to the races. So, that was good. And I think the only thing I would add just to the comments, which are all very very insightful, is that despite the volatility on the spot price, the users of silver are still, mainly China, are still paying a premium for silver. And, we know that, we're a producer, so we've got some intelligence in that camp. And it's mostly the traders that are benefiting from that right now, which is good for them. But that is still happening, and I don't think it matters if silver is at $60, $70, $80. There's a big push to encourage silver to land on Chinese shores and be there for the for the solar panels and all the other things they need silver to make there. And just it's discouraging supply going elsewhere, and that seems to indicate that the demand side is still very, very positive. So if there is sort of day-to-day trading going on around the margins, I don't think it's really affecting the fundamentals long term with what we're seeing in the market.
Great, I appreciate that. Kit, I'll throw this next one to you because you mentioned the war. There's kind of two questions from the chat that I want to combine into one. Wesley asks, is the war impacting silver prices as much as it does gold? But Neil asked, are silver and gold both just following the stock market and up and down price moves? So I'll throw it to you for how you think the war is impacting silver prices, but also how it's impacting the whole market.
Well, as I said before, I think it's just tied to dollar movement, how that, there's been a flood of dollars or money into dollars, safe haven. And the other thing is, a lot of people feel that, the gold has been a store of value for a long time, but when you have these turmoil in the markets, margin calls especially, then gold is a source of money. And so you don't have, I think the saying is, if you can't sell what you want to, you sell what you can, and that is gold. So that's really driving that. And then I think that's the key there. And when that settles down and you start to see a dollar outflow again, you'll see stronger gold and silver prices. And then, of course, if there's a recession, that really hits the metals like copper more, not gold and silver. So anyway, there's a short answer there.
No, appreciate it. Yeah, gold and silver, precious metals tend to survive because copper obviously is connected to building, which during a recession is tough to do. Joaquin, I'll throw it to you if you have any commentary just about is silver following gold, and if it's because of the war, you think, or if their divergence is likely and related to anything else.
Well, I think particularly that gold was actually at some point, and this is comments that I've heard around, right? That gold particularly was probably overpriced at some point compared to what was going on in the market, and we will see all these corrections going up and down. And I believe that both metals will have corrections at their own time and on their own way, because obviously, as Kit is mentioning, gold has a use that it's mostly store of value or wealth preservation, and silver in this case is pretty much an industrial thing that we are starting to see a behavior related more to industrial materials and mixed with this volatility of an investment metal. So I think that we will see that discrepancy here and there, but in the general picture on the long term, they should be moving or following each other, right?
Great, no, appreciate that. And David, I'll just let you get in if you have any additional commentaries about the impact that war and general markets have on silver price.
Yeah, I've heard some people, kind of compare this to the COVID crash in 2020, and so, I took a quick look at that before the call myself, and silver from the very top pre-COVID level to the bottom was down around 40% ish. So it's actually been more of a correction here if you go from the top tick to the bottom tick.
Sure.
On silver in this phase.
None of them have.
But I do remember, because I was running the company. It wasn't that long ago. I was running Kuya back then, even that the pundits and the technical guys were saying, oh, silver's entered into a new bear market, et cetera, and just like they're saying today. And that kind of comment without the context of how long the bear market's going to be is kind of useless, because you can be in a bear market for minutes, if you want to really look at things, sort of trades by second. And so I think that if you look at how silver's rallied off the bottom, it's up over 20% from the bottom tick that we had a few weeks ago. So that's bullish, right? But anyway, so I think really no one knows, bottom line,
Sure.
where it's going to go from here. Obviously, we have a much higher price than we had before this most recent rally a few months ago, which is amazing, which is great for us. And I do think that the war has been a shock. I think it's been a shock to even much like COVID. I think people initially thought it would not be as big deal, and then they realized, oh shit, it is a big deal. Apologize for my language
This is
there.
no bleep webinar. All good.
But mature audiences only. So and so that's the situation we're in now. It's looking like this has much bigger impact on the global economy than we expected even a few weeks ago. And I do think gold and silver will rally strongly once there does look like there's a resolution in sight. And until then, hold on to your seats.
I appreciate it. And I'll stick with you, David, for this one. Something Joaquin mentioned right off the bat, but it's true. It's one of the big narratives in silver is that it's getting recognized for the dual role it plays in the market. I mean, people have always talked about it, but now I think general public's starting to talk about it too. That the critical industrial input for solar electronics EVs is also a big part of the story. How does the industrial demand side factor into how you think about the silver price, but also how you run the company?
I think of the industrial demand, which is significant. I think of it as putting a floor on the price, because those are the businesses and the people who will, at the end of the day, buy silver, not to speculate on the US dollar or going up or tie it to gold or whatever, but because they need it to run their business, right? And so obviously solar panels is a big business. There's a lot that goes into electronics. Those are kind of the number 1 and 2 industrial uses at the moment. There's the new battery design that's on the horizon that could be another big user of silver in the near future in the next couple of years here, which is pretty interesting. So silver does have a solid and growing user base in terms of the industrial side. And I really see that as putting a floor on the price. And then the delta between the floor and where the price goes at any given time, that's going to be the kind of the monetary demand. Silver is still a monetary metal, and it is in the long run tied very closely to gold in terms of its correlation. And so but it is a much smaller market. Let's not forget that. So the dollars that go into gold push gold up a little. The dollars that go into silver push it up a lot. And then unfortunately, the reverse is true when money flows out of the market. So because it's such a small market, the dollar value of the silver market's very small compared to other commodities. It can get whipped around a lot, and that's just something we deal with as as miners.
I appreciate that. And Joaquin, I'll throw it to you next. I know you came out of the gate talking about the industrial impact on the metal. So how do you figure that? You already prefaced it a bit in your first answer. How do you think that impacts the silver price going forward, and how does it inform how you run Argenta?
Well, as David is stating, these industrial uses, what they are doing is they are paving what's the floor of the potential price, and it's setting us to think to the future and not to stay only thinking on today. That's why we are aiming on the long-term resolution of a project like the one that we have, on the long-term putting production, on the long-term development of this project, the one that we have. But I think that pretty much that's what everybody's doing with these type of things, right? It has happened with every other industrial metal like zinc, lead, copper. You can't think on what's going to happen today. You need to think ahead of time and think on the long term. And something that it's very important to mention about the price of silver and how it's related to the industrial demand. gold, it's 100% used for physical investment. It's not just a portion of gold that you would use from that bar for physical investment. It's the same when you want to make a coin, a silver coin, you use 100% of that silver here. But if I want to create a solar panel, I just need a little bit of silver. So if I'm a producer of solar panels and I'm running out of silver for building those solar panels, probably I wouldn't mind paying more for that silver just to complete my solar panel, because the silver will represent approximately 8 to 15% of the price of the solar panel. So at the end of the day, if I pay much more on silver, it's not going to affect that much the cost of the final product or the price of the final product. So that's why when the industry gets crazy on paying whatever numbers they are for silver for industrial uses, we can see these spikes up very, very quickly. In China, that's what it was happening. They were securing silver pretty much, and that momentum, that this securement of silver, it's creating, it's very impressive, and I think that we will see that going up and down, but in the long term, it's going to be an upward trend. We need to follow that, and we need to think ahead of time.
I appreciate that. That's a helpful insight that obviously every solar panel needs silver, but not that much. So they'll buy it at pretty much any price to a certain degree. Kit, I'll throw it to you to close us off on how industrial demand affects price.
Yeah, I think not a whole lot to add there, but anytime you have a big run up in metal prices like this with silver and years ago with copper, when you saw some substitution by aluminum. So did a little bit of research. There is starting to be technologies of using a silver copper alloy in solar cells. So you will see,
and I
start to see substitution depending on the manufacturer.
I told you about that.
So that'll cut back on some of the demand on silver, but still the overall growth in solar is very large, and silver is such a big component. You know, the biggest problem, it's really on the industrial side, is not so much the uses there is in North America. It's the lack of any smelter capacity for either lead or zinc, which from a byproduct standpoint,
And
that's where the silver comes from, and that's where the Chinese really get their control on the market. So once the U.S., which they have figured out, but once they can actually fund some new smelter capacity, then you'll see some of the supply coming back to the North America. But smelters take years to build, so that's going to be a long time out.
Having said that,
appreciate that. Kit, I'll stick with you on this one. I want to talk about something the internet loves to chat about, which is the silver gold ratio. Now I know some people, I'm an avid follower of this conversation online, think there's still massive catching up to do for silver relative to gold right now. Some say the ratio is normalized. I'm curious where you think we are in that story.
I'm sorry, was that back to me?
Back to you, Kit. Yeah.
Yeah, I think there was quite a compression of the ratio there when silver ran up. You have the volatility like it is now and all the other factors coming in, I think you just need to stand back and wait and see where it comes out. So I don't really tend to predict prices at all. You know, that really doesn't affect our business. Once you get over that $40, $50 price range, then that's really what our long-term planning is based on. I think our last resource at Illinois Creek used $45 silver, and some thought even that was aggressive. But it's that's a long-term play. I mean, years ago, there's a lot of mines in Arizona from 100 years ago called the 16-to-1. So there's obviously a lot of room to go, but that was 100 years ago, and times change. So I'm not really going to predict that.
No, appreciate that. Joaquin, I will ask you to do some crystal ball gazing with me, though, and talk about the silver gold ratio and where you think we are in that story.
Well, I've spoken a lot about the silver gold ratio before in other channels, but what I believe is that involuntarily humanity has always put the price of silver to a ratio of 1 to 12 to gold.
That's right? Exactly right.
And
take profits
or 12 to 1.
Price goes up.
And that's pretty much coming from the Roman era.
I sold
Roman coins were pretty much at that rate, 12 to 1. And it's funny because in nature, that's pretty much the way that silver appears in comparison to gold. So I think that if that's the availability in nature, somehow that would be the availability for us as humans to be able to extract that. And therefore the price that we will be giving to it ultimately on time. So the approach that I have to that, it's more an approach based on science rather than on the economics per se. However, we are human beings, we give value to things independently of what happens in nature. And this ratio might be shrinking or not. The thing is that we have seen how this ratio compressed, and I think that that's a very good because it's attracting a lot of people into the investment side of things for silver. People that didn't believe that silver was going to be an investment material, now they are rushing to it. They are starting to understand that it's probably much more accessible sometimes than gold, and well, that's what I think in terms of the ratio, right?
No, it's interesting the difference a year makes. Certainly, I know people seem to have short memories. I was selling kilo of silver at $69 the end of last year and was feeling great about it. I was really excited. David, I'll throw it to you to close us off on the ratio before I move on.
Yeah, I think the ratio. I do follow it pretty closely. I think it's a really good indicator of sentiment in the precious metals sector. I think. I mean, it doesn't mean much in and of itself, but I think if you look at, over years and how that number changes, when the precious metals are bearish, gold's going to outperform,
sure.
And that number is going to go up, to 100 or whatever. It was up at 120 briefly a few years ago, and then when we're more bullish. Silver is going to outperform gold. It's the higher beta of the two commodities, and so it's that ratio is going to go down, and it's sitting at about 65 right now. The last peak was 30 in 2011. The other kind of interesting thing about that ratio to watch, I think, if you want to kind of put the really bullish case for silver out there, or one of them, there's many, but one really bullish case for silver is that if you go back to the very beginning of the gold being freely traded, okay, that's the late 60s, early 70s, the gold silver ratio has actually been in a bull market for gold. Okay, it's been going up. It's been trending up. There's been ups and downs, but it's been trending up the entire time, and that's more than 50 years, probably almost 60 years now, right? If that ratio breaks, technically, which I think you got to go below 30 on that, sure. Then we kind of are entering a new era, potentially very, very long-term era of silver outperformance. And, who knows that there's obviously got to be a reason for that to happen. Things don't just happen because the charts say they're going to happen. There's got to be a reason. And, it could be the new battery,
sure.
For example, that drives the price up kind of, more or less forever, right? In terms of how long we're going to be around. So that's kind of an exciting thing to watch. But in the meantime, we're kind of right in the middle of the range, 60, 65. It's been higher, it's been lower. So I would just watch it for big momentum changes.
That makes sense. See if it gets back to that Roman Empire ratio. David, I'll stick with you for the next one because I know as a producer, this volatility obviously impacts you, not hypothetically. This is an actual real impact to the company. Silver went from $31 to over 100, back down to the 70s and 80s. One of my clients with silver and gold calls silver a drama queen, which to some degree I agree with. Volatility is fun for headlines, but obviously makes it hard to plan, finance, advance projects. So how do these moves in the last year impact how you're running and making decisions about Kuya?
Well, because we're still in the ramp up phase. Okay, so if we were at a steady state of production, which will be by the end of this year, then essentially you're just constantly selling your silver And if you don't do anything like hedging or anything to manipulate, you know, your price, you're going to end up with the average price over the quarter, okay, or over any period of time, at quarter, year, whatever, right? So that's where we're headed. In the meantime, our sales are a little bit more lumpy because we're still, you know, kind of in startup mode. We were fortunate that we did sell, you know, some silver. We were able to sell some silver at over $100, significantly over $100 an ounce in January when the price was spiking. You know, we happened to have some silver concentrate ready for sale at that time, and we sold it, and, you know, good on us. And then, you know, now we're selling it at whatever the spot price is, you know, $70, something like that, right? So we'll end up with some kind of average of that. But, you know, that's kind of how it affects us practically from, you know, from month to month. You know, Kit made a good point earlier that, you know, at these prices, you know, you know, whether it's 60 or 100 doesn't significantly affect our project. You know, we're going to make a lot of cash flow either way, especially once we get to our, you know, to our full ramp up of our phase 1 production at Bethania. So, so we're not super stressed out about the price going up and down. Obviously, we prefer it to be at 100, but you know, we're more focused on actually making the operational success here. That actually impacts us more than the silver price does, is making sure we're getting that production, we're ramping up, you know, so our unit costs are going down per ounce of silver, and then our profit margins are expanding. And, you know, that's going to make a much bigger impact to our business in the short term, like the next 6 to 9 months, than whether silver's at 50, 60 or $100.
I appreciate that. Kit, I'll throw it to you a version of this question that comes right from the chat, which is, when do you think silver is going to stop being so volatile and even out at some kind of floor? It's a crystal ball gazing question, but I'll throw it to you anyway.
Well, that's an easy one. So whenever the war in Iran is over, then things will settle down, whether it's oil, copper, silver, gold, or just about everything else. So you know, the price run up was spectacular. I think the biggest problem with the volatility right now is twofold. One, really in the capital markets. If you're a company trying to raise capital right now, there's so much volatility and investor uncertainty. What is the price per share that somebody should raise their capital at? You know, when it changes 20% in a week, you know, that's very hard for anybody, the investment bankers or companies, to put a price on something. So that's sort of a negative there. And then I think you saw the market saw the volatility in whether you're a producer, intermediary, or a junior explorer pre-development like we are. You know, the share prices really get affected very rapidly in this type of market. So that's a negative. We are starting to work on economics and looking into PEAs on our Illinois Creek Gold project and the heap leach there. And so I think from a benefit, you can have more flexibility when you're looking at economic analysis. And if you're stuck at $30 an ounce, then that's where you end up doing your economics at. But right now there's a lot of upside, a little more blue sky, a lot of flexibility. So that's the good part.
Great, no, appreciate it. Joaquin, I'll leave it to you for that on how this drama queen headlines impact Argenta, but you know, how it affects how you run the company.
Well, I think, Romeo, that it's very important for the audience to understand that David, he has a project where they are selling silver at certain prices depending on the market and what's the price of the silver. Kit is already speaking about economics, and they are trying to pick up those prices and to understand those numbers on where to stand with the silver price. But we are exploring. We are trying to build this into the future. So if I were making decisions on the flavor of the day for the drama queen, imagine what it would be for this exploration company. It would be chaos. So we need to think again on the long-term picture, on the long-term future, where it's affecting exploration companies that are not thinking on economics at this moment. I think that it's pretty much on the financing capability, right? How we are going to raise money, or at what rate are we going to create dilution to our shareholders or not, because obviously the silver price, it's affecting our share price. So we need to understand where in the market we are, how much treasury we have, how we make decisions with the money that we already have in our treasury, and how we move forward with that treasury, just not to fall in a moment where the market is down and where it's going to be really difficult to raise money. So it's pretty much more finance engineering what we need to do on our side, and trying to think, okay, how we are going to manage the treasury. The long-term picture for us doesn't change at all if the silver price goes up and down. We're still exploring, we're still trying to find more ounces to build a deposit that can be economically extracted at a certain price of silver. But that's mostly it. We are doing a lot of finance engineering on our treasury, on how we spend the money, and thinking where in time we are going to require more money to raise. And it's kind of a different picture, as you can see from David, from Kit, from myself. The question will have multiple answers depending who you ask and what's the stage of the project, right?
Of course. And speaking of different answers for all three of you, I do want to talk about jurisdiction for a bit, because in the time I've worked in mining, I've never heard anybody talk about jurisdiction more frequently and more seriously than I have in the last short period. And I know you're all exploring or operating in very different jurisdictions. Kit, you guys are in Alaska, Joaquin, Argentina under the Malay government, and David operating and selling in Peru. So I'm curious if all of you could give me, and Joaquin, I'll start with you, just the 1-minute pitch on why your jurisdiction is the right place to be building a silver company right now.
Well, we are in Argentina, and we are the soccer world champions, so that's something to think about.
That's good enough, right?
Speaking seriously about silver, Argentina, it's a country that has always been marginal to global problems. So to global conflicts, okay? On the First World War, Second World War, we kept a very marginal position. We are far down south, and that is something that is strategic, geopolitically speaking. Argentina has very good networks of roads, of electricity, of a lot of things, of railroads, a lot of infrastructure. It's a very, very safe country. One of the most important industries in Argentina is tourism within the country. So a lot of families with kids go and travel around the country. So it's very, very, very safe. And when I think about jurisdictions, the first thing that I'm thinking of is how many issues is that jurisdiction going to bring to me in terms of safety or government or different aspects. And I think that Argentina is positioning itself in the world as a major producer of metals. The government that you mentioned of Javier Milei, it's been doing a lot of reforms, a lot of progress in those terms. We have started to export oil recently. We are starting to export energy very soon. We are creating a lot of things that are opening ourselves into the world, and we are keeping, through the government decisions, very good relationships with Asia, with North America, and with other places in the world, which position ourselves not far from conflicts in a really, really good spot. And I think that the other two jurisdictions, now Kit and David will tell us about that, but I think that those are marvelous jurisdictions as well, really, really good as Argentina is.
Awesome. No, appreciate that. And Kit, I will throw it to you next to just give us the case for mining or exploring in Alaska.
Well, Alaska has always been a natural resource state. It started with the gold rush many years ago, 100 years ago, and then, of course, with the famous Kennecott copper mine. It was one of the largest in the world. A lot of people don't know in Juneau, the AJ mine was closed during World War II, and that at the time was the largest underground gold mine in the world. So Alaska really is now put in the forefront by the current administration, both in the state of Alaska and in the U.S. government, to push forward with permitting reform, which is critical throughout the United States, not just in Alaska, but it's happening today in Alaska. So that is really the safe jurisdiction part of it. Alaska's always been a mining state, has very good mining laws. We are 100% on state of Alaska land, so we're very fortunate. That is our regulator. You know, we can talk to the feds, but we don't need to all the time. And the other thing is a little bit of, well, not off topic, but for the last year and a half, the state of Alaska has really been pushing the Alaska natural gas pipeline. There was a lot of concerns about the cost, things like that. But one thing the war in Iran has shown is how quickly supplies of things like natural gas and LNG can go away. And I think that is going to be really helpful for the energy future in Alaska. So permitting, energy, and the recognition of the importance of mining is really helped us tremendously.
I appreciate that. And David, I'll throw it to you to just talk up working in Peru.
Sure. Peru's a very big, sophisticated mining country. You've got basically everyone from the entire world mining there, from the biggest, base metal and gold mining companies, down to juniors and explorers. So you've really got the whole suite of companies there operating, and a pretty good sized domestic industry as well, of Peruvians investing in their own country, with companies like Buenaventura and Hochschild, etc. So the fundamentals are really strong there. You've got good mining laws, you've got a good history, you've got a politically neutral, so similar to Argentina in that respect. So they're really able to, I think, maneuver these challenging times and stay as a positive contributor to the resource world. In terms of our experience specifically, we've built a really good team that has specialization in permitting. So we've gotten some pretty big projects permitted over the course of our history as Kuya, including permitting a plant and exploration programs and all sorts of other things that we need to do at the mine. So the government's been neutral to favorable, I would say. It's a very spread out political system at the moment, with no concentration of power. Mm-hmm. And so what that means is that you end up with, by default, something that's very stable.
Sure.
Because you don't have anyone on the left or the right pulling at the direction of the country. So everything sort of settles right in the middle, which is actually good for the mining companies, because stability is always good. When economically the country's doing well as well, low inflation, the Peruvian sol's been a very strong currency globally. I've mostly good things to say about it. It's very safe as well. So it's been a very good experience for us to be there. Happy to operate there.
Awesome. And I got one more. Oh yes, go for it.
If you allow me, just because David is mentioning that South American countries at this moment are excessively safe, very well connected. There are corridors in between Argentina and Peru, Argentina and Chile. Peru, it's really well connected with the Pacific Ocean and with other places. And there are agreements in between Peru, Argentina, Chile, in terms of moving materials, and the corridors that you have in between those three countries are very, very well connected. The same in between Brazil and Paraguay, for example, or Uruguay. All of them are connected through Argentina with the Pacific region. So it's not only the capability of getting permits, moving the ores within the countries, and all these things, but it's also the supply chain. And I think that we are starting to see that on the oil industry. I see a lot of questions about oil in the chat, and those disruptions on prices are pretty much created by the disruption on supply chain. And there are so many conflicts in North America, in Asia, and in Africa, and other parts of the world, that ultimately I think that South American countries that are productive countries, they will be very benefited due to the potential disruptions on the supply chain that we will see very, very soon happening more and more often or in bigger terms, right? So yeah,
Agreed.
very, very well positioned in the world.
Basically,
Agreed. And I
saying
think
South
close
American
watchers of the
miners
news will see
probably do
increased
better.
South American cooperation over the next period. I think that's almost certainly the direction we're going. But you are right. I do want to talk about oil. And David, I'll throw it to you because the specific question from the chat is what type of impact rising oil prices, obviously from the war in Iran, has an impact on ASIC.
I still haven't answered my
So
question.
I'll throw it to you for that one.
Look, it's going to be very, very different depending on where you are in the world. Hearing that it's become very problematic in Western Australia, for example, where they rely almost exclusively on diesel power. For us, the impacts are actually surprisingly minimal. We do have an impact. I won't say that there's none, but for us, we really have three. Our operation specifically, we really have three sources where we use a lot of energy, or we use energy. One is the plant, and the plant that we are using, the one that we're currently buying, is connected to the hydro grid in Peru. So there's little to no impact from global oil prices there. That's the biggest source. That's the biggest power usage we have. The second biggest would be trucking.
I'm gonna mess them up with
And
this
in
question.
trucking, the big mining trucks and the haul trucks in Peru have been fitted for natural gas, actually. Peru produces its own natural gas and has a domestic surplus, so they actually export it to the neighboring countries. And so the price of natural gas, even though globally is expensive, it's much cheaper in Peru. Because again, they're kind of they're not part of the global market for Peru for natural gas. And then the third is the mine itself, where we need power for electricity, the fans, stuff like that. And that we do use diesel power, so that's where the impact would be. It's lower in terms of our power usage, but we do have some. And so, I think in these prices, where we are today with oil, it would be in sort of the tens of cents per ounce ASIC for us. If oil goes to 150 or $200 a barrel, then we might be looking at $1 or $2 per ounce impact to us. But that would be sort of the limit of it, I would expect for us, our operation specifically. But as I said, depending on where you are in the world and where you source your power, it's going to be very, very different.
That goes all the way back to the beginning of this conversation. We talked about the bifurcation of the world market. I don't think we're due for any decrease in that. It's coming up soon. I do want to talk, just before I get into an opportunity for you guys to talk about your own projects. Kit, I wanted to start with you with the most crystal ball gazing we'll do today, which is looking forward 2 to 3 years. So if this is a sustained bull market for silver, which I think it is, and based on our conversation today, I think most of us here agree.
Yeah, going to
what are we going to see in 3 years? We're going to see the same kind of M&A wave the gold sector's been going through. What does it mean for pure silver plays? Just looking for you to kind of look into the future here with me.
Well, I think the biggest benefit is with the increase of precious metals in general, that there's a new understanding in the general investor markets, which really didn't know how to spell mining 3, 4, 5 years ago, especially in the US. So the opening of the eyes of investors towards mining in general, and then precious metals, including silver, I think is very important. So for us going ahead, it opens a lot of additional pathways for capital markets and financings. And in the September, we became a reporting issuer to the SEC. So we'll be focusing on US markets and future financings. And the planning ahead, we're moving now into a pre-development phase, looking at the economics of both our high-grade Water Pump Creek deposit, which is mainly silver, that needs a little more geotechnical work to do going forward. But now with the increase in prices, our Illinois Creek past-producing oxide gold mine economics have really changed. So going forward 3 years, we're looking forward to permitting Illinois Creek. Both mining is energy intensive, so all of these will be affected by the price of energy. We may look at direct shipping for Water Pump Creek to eliminate milling. That's one thing to look at. And there's a lot of variables, but I think it's just very positive going forward. The avenues that now are open from financing to planning and engineering, I think, are very important.
Awesome. Appreciate that. And Joaquin, I'll throw it to you for looking ahead, if you will, with me, 2 to 3 years in the future. What do you think the silver market looks like?
I will expand a little bit more and not stay only in silver. We are coming into a world that it's growing in population exponentially. So if you think on the generation from the 50s, the population in the world was approximately 3 billion people. Okay, so 70 years after, we have close to 10 billion people in the world. So we have put more people in the world in the last 70 years than in the previous 1.5 million years of the history of humanity. So it's very interesting to see that in the past decades, there have been no discoveries or no big discoveries in terms of copper, in terms of big silver deposits, and in terms of other elements. And I think that this growth in population is going to accelerate demand. We have been living with what we have as the scavengers from the past, trying to survive. For example, on the silver industry, in coins that people has been melting to obtain silver from those coins, and in terms of copper, the grids around the world are obsolete. Some of them needs to be changed. In those cities that there will be new buildings, they need to rebuild, or they need to build from zero actually all the electrical grid, and that's going to mean a huge amount of elements that will be required to power the demand. So what Kit is mentioning about energy precisely, it's one of the main drivers in the future, and the population itself will consume for investment and other uses, but silver being an industry
market bottoms and market where people are too afraid, and market peaks where things get too overvalued. We're at neither of those things right now. So there's pretty steady, I would say, M&A activity going on. We've seen some big transactions in the silver space already over the last 1 to 2 years. There just aren't very many companies, so I think that's the limiting factor. Actually, is that limits M&A is really supply and demand. There just aren't enough companies, so you're going to have fewer deals than, let's say, in gold, where there's hundreds of companies to choose from. So, but it will happen, and good projects, and I think producers, depending on what the rationale of the acquirer is, are going to be of interest, and you'll see more deals happen. And it honestly doesn't make a huge impact on my day-to-day of running the company.
Sure.
I think much like Joaquin made a good point. We have to drive value for the future, and we're building something that is going to be a great and much more valuable company Kui shareholders, and then if something else happens, so be it. But that's my priority is to build our assets as shareholders into something that's multiples more valuable than it is today, and we have the assets to do it, and we have the market to do it. So it's a really good time, actually, all things considered.
Awesome, appreciate it. Two quick reminders just before we get into the end of today's event. I will be asking everybody just an individual question to talk about their own projects. Just because of time, I'll ask you to keep it to 2 minutes. But also for folks in the room, please do feel free to request a meeting with anybody in the room with that request a meeting button right at the bottom of the screen. But Kit, I want to start with you. Alaska Silver just announced most aggressive drill program ever at Illinois Creek. 6,000 meters, 2 company-owned rigs targeting Water Pump Creek and the new Silver Sage discovery from last year. You've got 75 million ounces silver equivalent inferred at Water Pump Creek at nearly 280 grams per ton, plus the Illinois Creek gold-silver deposit. And now you're interpreting the property as hosting maybe 2 separate CRD porphyry systems. So I'd love if you could walk us through the Summers program, what it's designed to prove, and what a successful season would look like for you.
Okay. Well, it's be a long answer. I'll try to shorten it up a little bit, but yeah, we're very excited about this coming season for the first time in years. Instead of running around in the capital markets today in March and April, we are 100% working on planning this year's program. So we'll have at least 2 of our company-owned rigs starting up in early June. One will be focused on expanding the current resource at Water Pump Creek. We're moving to the Water Pump Creek South area. Across the structure, we have some very good vectors from our drilling last year, and pretty confident we can expand that. So the goal is really to at least double the tonnage of Water Pump Creek, and that will be a major revaluation for the company. Very exciting, though, last summer, while we were waiting to get our approvals from the SEC and the financing in October, our technical team made a great discovery just south of our airstrip. Water Pump Creek is 1.5 kilometers to the north, and our Silver Sage discovery is 1.5 kilometers to the south. So right in our network of infrastructure. That was a totally blind discovery, following up soil samples. Trenching, we have a lot of our equipment on site, so very quickly we can trench, explore, and turned up some excellent argentiferous galena, which is really the mineral that brings the silver to Water Pump Creek. So samples of well over 1 kilo per ton silver, very high-grade lead. We'll have a second drill rig working there, and hopefully that will turn into a third resource on our project. The Illinois Creek deposit does have about 22 million ounces of silver contained there. It is an oxide, so we're going to work on metallurgy of that, do some testing, maybe even a pilot plant coming up soon. And that is really our probably closest near-term catalyst, starting with the leach pad that's sitting right there ready to go. The second carbonate replacement deposit we have is to the north, next to our Round Top copper deposit. We now have an expanded technical team. Won't be drilling there this year, but we're going to do some advanced soil sampling and trenching, and that we know is similar geology to Water Pump Creek. Ultimately, that will be the second center of mineralization and deposits in our district, because it's really important to understand we have a district, not just one deposit.
Appreciate that very much. Joaquin, I want to talk about Argenta. Only 18 months old, already delivered somewhere around 320% share price increase. You've attracted backers like Frank Giustra, Eduardo Elstein, sitting on close to 50 million ounces of nearly pure silver at El Cavar. I got a 12,000 to 15,000 meter drill campaign underway, with early results already showing 246 grams per ton over 20 meters at Yachte, and a brand new gold copper target. So with all that in mind, tell us what the next phase of drilling is designed to accomplish, and what you think makes El Cavar stand out as a silver asset.
Well, I would start on the last question. We are a particular company that holds one of the only assets, if not the only asset, that it's 100% pure silver. So when you check our analytics, you will see that there is no gold, no lead, no zinc, no copper. It's just silver on the resource, and that's in the rock. So the rocks, they don't have anything else than silver minerals in there, which is very, very strange in nature. And that's probably what makes us so particular. We have 50 million ounces in our resource, as you mentioned, Romeo. On our resource, 45.3 million ounces are indicated. That's pure silver, not silver equivalent. And what we are going to be doing, and we have been doing so far, is we've been drilling on both ends of the deposit. The 50 million ounces are located in one deposit, and we've been drilling both ends, stepping out. We have stepped out so far in total 270 meters, which is approximately 20% of the totality of the footprint of our deposit. And the potential of the project, it's not only on the open ends of the deposit where we are stepping out, but the potential it's also on the exploration side of things. We have proposed a 60 square kilometer exploration program that will cover that ground. We will be doing geophysics. We will be doing metallurgy on the deposit itself, and we will also be doing an environmental baseline. We are drilling new targets in those 60 square kilometers. We are putting boots on the ground where people hasn't been before. So a lot of information it's been created after that work, and we will have a lot of flow news, Romeo. I think that people will be watching you and me disclosing that here on this platform a lot during 2026, because it's a lot of drilling. We have a lot of meters to disclose and a lot of surface work to disclose, plus all those studies that I was mentioning. So what's coming up? Well, lots of news. So I will tell the public to stay tuned, because we will be posting that out, more step outs and more discoveries to come for sure.
Awesome. I hope you get completely sick of my face by how much we hang out over the next couple of months, Joaquin. David, I'll close it off with you. I know, Kuya, you're one of the few silver juniors that can say you're actually producing right now. You reported record Q4 production at Pathania, just closed big financing. You're acquiring the Camilla processing mill to vertically integrate, and you expanded the current drill program to 20,000 meters. You've said you expect the first profitable quarter in the near term. So tell us how all these pieces come together, what Kuya looks like by the end of this year at these silver prices.
Sure. I think when you look at Kuya, one thing to keep in mind is that our share price went up with all the other junior producers because the silver price went up, but we really haven't been, revalued the way a cash flow positive junior or cash flow positive miner would be expected. So really, I think the market's expectations for us are very low at the moment, and so the potential for us to surprise on the upside is huge. And when I look out the next couple of quarters to Q3 and Q4, we should have very significant production from the Pathania mine. At these prices, we don't need to produce much to be profitable or break even. And I think as you go into Q2 and Q3 of this year, you're going to see that in our numbers. And in Q4, we're still targeting to hit our phase one goal, which is going to be producing around 1.5 million ounces a year before we start looking at the next growth phase after that and doubling production again in 2027. So all that means is a lot of cash flow. When you run the numbers at these current silver prices, I mean, it almost gets ridiculous. In terms of how cheap the company is relative to the amount of cash flow we could be making, especially when you look into 2027. So it's a great time to sort of be with us here, and as I said, the stock, if you look at it, yeah, it's up a lot from early 2024, or 2025, but we weren't really doing much back then. Now we're fully financed. Now we have a huge exploration program to grow resources. We're gaining a lot of momentum on the ramp up here, so it is really a great time from a risk reward point of view to be buying the stock.
Appreciate it very much. I know I always say we're going to be 45 minutes, but there's always so much to talk about. We go to the hour, so appreciate you all hanging in with me. I know there's a big audience today. Really appreciate everybody's questions, and I'll pass through your meeting requests through to the individuals that you requested a meeting with towards the end of the event. But David, Kit, Joaquin, thank you so much for joining me today and letting me grill you. This was fun. I hope everybody came away with a bit more info from all these insights. I hope everybody has a wonderful Easter weekend.
Okay. Thanks, everyone.
Thank you.
Bye.
Cheers, everyone.
And that was it from Argentina Silver Corp, Alaska Silver, and Kuya Silver. I know a little bit something about Kuya Silver they didn't touch on. And I got an email from them about 2 days ago, I think it was. And it was stating that they are looking at acquiring a smelter in Peru. So if they're going to be cash rich and they acquire a smelter, then they start mining silver. They'll be able to smelt it themselves and also recoup all their money from smelting other people's silver. And also an American company will have a smelter, not in America, but we'll still have access to it. Due to geopolitical, it might change, in the future. That's the problem with not having things here in America, but at least access to a smelter for the American companies if Mexico fucks us, China fucks us. We'll have another outlet to smelting silver for American companies. And that's another reason why I say look at them. Don't look at me, I'm smoking pot. But yeah, that was basically about it. I just wanted to put out, I hardly ever do solely silver live streams, but Six Events is a good show. They do live streams, and I'm always on the fucking panel, so I get to ask questions, and usually they answer them. Today they didn't answer them. That just means that they were too good at questions. They usually don't answer questions that are too good because it'll ruin their future market or whatever their plans are or whatever. But basically, small micro nuclear reactors are going to open up mining, where they were talking about diesel being a cost, getting supplied there, all this extra cost of it costs so much, then we got to transport it to the site and all this other environmental stuff. That's all expenses that the small micro reactor, there's none of those expenses. That actually makes it worth buying. Because over a life of a mine, say the mine lasts for 7 years, short time, 10 years, short time. Most of them go longer than that. In that time, in the transportation and delivery and purchasing of diesel fuel to keep that mine running for 10 years, you'll have paid for 3 micro reactors. And with the micro reactor, you got more than enough power than you'd have from what you're using on a diesel, so you could sell the excess. So it'd actually be profitable at that point in time for you to buy a micro nuclear reactor over going with diesel. Just saying. That's the future of mining. They might not be talking about it, but that's what it is. And you'll find there's going to be a lot of places up in northern Canada, Great White North, where no one lives and no Canadian goes. There's shitloads of mines going to be opening up there. A friend of mine's son, I don't know. He died over 10 years ago. His son was up there for 10 years, ended 15 years ago. So 25 years ago to 15 years ago, he was up in northern Canada where there are no towns and roads. They had all the shit helicopters, and all he was doing exploration drilling for 10 years in the northern Canada where there's no roads, up there by the Arctic or whatever is up in the North Pole. He was all up in that area, just doing drilling, getting drilling samples. None of the companies could do anything with the minerals they found other than purchase the mineral rights of the area where they found the minerals, which they did. And then those exploration companies make money off of doing that. Then they sell the contracts. And that's why most exploration companies don't become mining companies. That's why you got to keep an eye on those exploration companies that turn into mining companies, because they see the advantageousness of not just selling what they have, but keeping it and developing it, which means they got something good. That's why most exploration companies don't turn into mining companies. Don't know about coal. All I do know is in Alaska, the Air Force has already ordered 1 micro nuclear reactor for the Air Force base up in Alaska, because they're tired of getting paying for fuel and the boats that have to pay to bring the fuel in. So they've already purchased. They're getting one of the first micro nuclear reactors ever produced up in Alaska at the Air Force base there. So I don't know. Once they get that, they might not want coal. Although coal is abundant as hell. I mean, China opened, I said this last year, China opened 300 coal-powered power plants. They're raping it with making energy, non-greenhouse energy. So obviously greenhouse gas is a bunch of bullshit. China's been making money hand over fist as we've been tying our hands behind our heads, saying, let's fight. Come on, let's fight. Let's fight. Oh, let me block. Oh. Yeah. Get rid of that Green New Deal bullshit. Let's get to really making some freaking money on this energy shit and show China how to do it. We should have about 20 micronuclear reactors in every state. If we had that, your electric bill would be $50 or less a month, probably $25 a month, because we'd have an abundance of power. We'd be exporting power. Well, we're exporting oil right now. We need to export all power, electricity, natural gas, oil. We need to be manufacturers and creators of it and export it out to the rest of the world. We're on the way. I mean, we're exporting like 10 million barrels of oil a day at astronomically high prices. We're exporting. Export. America sells shit. Expensive shit. It's getting more expensive, and we're selling it. Yeah, it's going to cost us a little bit, but everything goes up and down. It's for a reason. So, someone's getting coffers filled right now. Once those coffers are filled, the price will go back down. Oh well. But anyhow, this has already gone on for 1 hour and 5 minutes. I just wanted to bring you that live stream that those dudes were talking pure silver about everything about silver. And I hardly do a live stream just solely about silver. I figured it'd be unique and different. I hope you all enjoyed it and hope it was entertaining and hopefully maybe informative. Again, I would suggest looking at, of those three, I would look at Kuya. Because from what I recall, they were actually looking at buying a smelter in Peru. They started looking at whether it'll happen or not. So, to be determined. A lot of politics there, but anyhow, you guys have a nice day. Thank you for joining in, giving me a little bit of your time, and I will talk to you on the next one.